So Biden announces his budget filled with all kinds of items. And believe you, we will certainly have a full breakdown on those on our next episode here on Dollars and Cents. But I wanted to set that conversation up with the other little information that recently got released, and that is the data from the folks at the Internal Revenue Service. And so the data from the folks at the Internal Revenue Service is something that they issue out on a regular basis that takes and combines all of the information on all of the tax returns that were filed with the IRS. So obviously the data that they just released isn't exactly 2022 data because people are still in the process of filing those tax returns, and they haven't really finished processing 2021. There's still several million returns out there that they haven't finished processing. So anyway, the data that they released had to deal with the calendar year 2020. And the reality is that the results may very well surprise you. It certainly calls into question some of the little sort of snippets, if you will, or the three-word mantras that seem to be kicked around on a regular basis out there, right? The three words, tax the rich, tax the rich. The problems in this country are not so great or not so easily solved that you can come up with a three-word slogan and think that you're going to somehow solve the problem. Because when you start to hear the data, you may question, like, how are we going to do that? Because Americans should fundamentally be quite worried about the impact of this approach, because ultimately the impact impacts everybody. Here's the data that the folks at the IRS recently reviewed, along with some interesting perspective of where the same data was 20 years ago. So buckle up your seatbelts. Here we go. Welcome on in to Dollars and Cents. This, of course, is where we help you make sense out of all of those different decisions that have anything to do with your dollars. My name, of course, Joel Garris. You're listening to a program that is one of the top 25 financial planning podcasts on the World Wide Web, coming to you on a variety of stations throughout the Central Florida region. I'm a certified financial planner, certified financial fiduciary at Nelson Financial Planning, where we got a team of great folks, all of whom happen to be certified financial fiduciaries as well, that stand ready to help you change your life with a successful and cost-effective financial plan. So here's the numbers. Here's the data. Internal Revenue, and we're going to read it so we don't miss any of the data. The Internal Revenue Service recently released its income and tax statistics for 2020. Top 1% of earners, take a guess at the percentage of the country's income taxes that they pay. 20%? 30%? Maybe a third, right? Nope. 42.3%. Top 1%. Pay 42.3% of the country's income taxes. The same 1%, just to kind of see what the data numbers, the hard numbers are, reported earnings of 22% of adjusted gross income. So if you're looking at the math, the share of taxes paid by the top 1% as a group is roughly double their share of income. Top 1%, effectively reporting about 22% of cumulative adjusted gross income on tax returns for the year 2020. Meanwhile, that group pays 42.3% of all tax revenue. No matter how you slice that, let's be very clear that the tax system in the United States is a steeply progressive system. You made 22% of the total adjusted gross income, but yet you're paying 42% of the total income tax payments. So those are the numbers. Let's continue on and dig a little bit deeper. And this is where it, picks up other people. The top 5% of earners reported about 38% of a total adjusted gross income, but paid 62% of all income taxes. So now, so we talked about the top 1. Okay, now we're talking about the top 5% of earners reporting 38% of the total adjusted gross income, but paying 62.7% of all income taxes. For comparison purposes, the bottom 50% of earners reported about 10% of total accumulated adjusted gross income and paid 2.3% of all income taxes. How does that compare to these same statistics from 20 years ago? Well, in 2001, the top 1% contributed about 33% of all income tax revenue, about a third, effectively about 9 points lower than the 42.3% that they now contribute in 2020. Similarly, the share of income taxes paid by lower income earners, the bottom 50% in the year 2001, provided about 4.9% of the total revenue versus 2.3% today. And certainly those are just some of the numbers that the IRS released against this backdrop of then this grand budget that gets rolled out. So the question you have to ask yourself is, well, where's the money going to come from? Because top 1% is paying 43%, top 5% is paying 63% of all income taxes. Top 5, 63% of all. Then, how much more is there, unless we want to, become France or something, to actually generate revenue that's going to solve these issues? And I think this is a problem, and this isn't intended to be some partisan rant of any kind. This is a problem, and if you're a long-time listener to the program, you know that we have disdain for politicians, both Republicans and Democrats, because of their inability to try and address the real problems in today's society. Look, we had Rob Field on this program last week talking about Social Security, massive projected shortfall. Second only to the massive projected shortfall, which is 7 times greater projected shortfall over the same time period for Medicare and Medicaid. These are real issues that aren't just magically going to go away. They require real conversations, serious conversations about give and take, about trying to come up to a solution that, at the end of the day, no solution is ever going to be perfect. No solution is ever going to make everybody happy. But at the end of the day, we need to have these conversations rather than just throwing around 3-word slogans, tax the rich, and somehow you think that that's going to ultimately solve the problem. It won't, especially when you actually look at the real data that is being actually produced out of the IRS. So compare that to the data from the IRS. How are you going to get there with your 3-word slogan? Because top 5% already pays nearly 2/3 of all tax revenue that comes in to the government coffers. So what else you thinking about doing there anyway? That's the background. That's the background on the hard numbers. And don't you just hate it when the hard numbers just kind of buck right up against kind of some of the slogans and the sound bites that you hear? But at the end of the day, whether it's government finances or whether it's your finances, it comes down to the ones and the zeros, the actual numbers. And we talk about this all the time on the program. You want to make a financial decision? You want to make a good financial decision? Run the numbers and see how they come out. It'll tell you a lot of exactly what you can and what you can't do. And certainly these numbers, courtesy of the IRS, would suggest that maybe there is some other way to engage in this conversation that might actually create a solution, because it's hard to ignore these projected shortfalls, whether it's Social Security, Medicare, or Medicaid. That's really where the greater projected shortfalls are, 7 times greater when you look at Medicare and Medicaid versus Social Security over the same time period. So anyway, next week on the program, we will have a fuller breakdown on some of the tax proposals that are in the Biden plan. We'll tell you which ones to kind of keep an eye on and which ones to just kind of ignore perhaps along the way. That'll be on next week's program. In the meantime, we're going to take a break on this week's program, and when we return, we're going to circle back to that 401k hardship withdrawal discussion we were having earlier in the program. Coming up next here on Dollars and Cents with Joel Garris of Nelson Financial Planning.